On today's show, we're going to be covering why Bitcoin may be entering the markup phase. That is according to the Wyckoff accumulation. So we'll cover that and a whole lot more. We had a massive move over the course of the weekend. I tried to update you every single step of the way on Twitter. Make sure that you follow me on Twitter, because had you done that, I have given you every step of the way you would have been able to capitalize on that entire move. So looking at the Bitcoin bubble charts over here, or the Banter bubbles charts at least, you can see that most of the coins are still up on the day. There is a small pullback which is currently taking place on the hourly, which is what you would expect, a bit of profit taking over there. And I really want to focus on this chart for a little bit as well. Now, I've overlaid over here, you have the Nasdaq in the light blue, you have the S&P 500, which is in the white, and then you have Bitcoin, which is all the way back at the bottom over here. You can see the discrepancy, the massive gap over there. It's something that we outlined last week, and we suggested that there would be some sort of mean reversion, whether that would be the stock market, which is going to come down closer towards Bitcoin, or Bitcoin that's going to move up back towards the stock market levels. Now, the Nasdaq, which has mostly been driven by these AI stocks, you have the Nvidia, which is obviously they create the chips for the AI stocks. That has been one of the big movers in the Nasdaq, which caused a massive spike up over the last week. And consequently, I mean, they added the entire market cap of Ethereum in just one day pretty much, which was absolutely huge, caused a massive move up, and consequently the S&P 500 futures chart at least continued to gap up as well, and that caused Bitcoin to follow suit. So the question is, what happens next? Is this going to be a continuation scenario? Well, let's have a look at the charts and we'll find out. If we look at TED Talks macro over here, he summarizes it very well. He says that Hong Kong opens for crypto trading, which is going to be on Thursday, June the 1st. You have now the US debt ceiling raise becoming official sometime early this week. So there was an announcement of that over the course of the weekend. And that is definitely, I think, the main driver of the risk coming back into the market. And then he said the AI narrative only growing stronger by the day. Bitcoin head and shoulders sellers are now well underwater and their stops are within reach. And he says, enjoy. So yes, there was a liquidity grab as well. That's basically how I took my long trade. You'll remember, I think I gave it last week on Thursday. We'll go over that trade and the way that it played out and what you can expect next on the low time frames. But the liquidity grab, we were targeting that $27,800 level, which is exactly what we got. So with the whole debt ceiling raise, is this going to bring new liquidity into the market? The macroeconomics is very complex, and it could bring a little bit of liquidity into the market. But if you look at Rand show from yesterday with Sheldon, then you'll see that maybe it's going to create a dollar run. If you look at liquidity and what's going on right now as it presently stands, you can see the People's Bank of China, the histogram has slightly ticked up. So you can see liquidity had completely evaporated for a long period of time. And now we're just slowly starting to see some signs of life. So if they are cash heavy within Hong Kong and China, maybe some of that money is going to flow into crypto. The US net liquidity over here is continuing to just oscillate around, nothing major. And then again, most importantly, we need to see the stablecoin supply tick up, and so far this is still in a very strong downtrend, which means that you need to be careful of trap scenarios, right? Wait until this starts to regather storm before you get too gung-ho and heavy on the longs. For now, trading on the leverage side is great, but positioning yourself for very strong spot positions in altcoin market especially is not necessarily the best play yet. But if this trend does play out, this is the M2 money supply year-on-year percentage change. You can see we are slowly starting to see very similar prints over here in the blue to what we saw, which marked correlation to Bitcoin's bottoming process in 2015, 2018, 2019. And now you can see again the same sort of pattern is starting to play out. So if that liquidity comes back into the market, the money is definitely going to follow the liquidity, and then you can expect that obviously things will tick on up. Now, this is starting to make the rounds on crypto Twitter, and this is a Wyckoff accumulation chart followed with a markup phase. Now, you need to correlate this to other time frames to be sure that you have your levels right. Because if price does come back down, where you can see it says over here, we are here. So you go through the accumulation phase. What is this accumulation phase? Well, if you look at the bottom price action over here and follow my cursor, that is about the 18, 19K level. This little blip down here is where we went down to 15.5. That's the deviation. We came back into the range. And then you have the red dotted line or the dash line over here. That is $25,000. And we've identified this is a very, very important and critical level to hold. If price comes down into the 25K level and holds here, then this markup phase is a real possibility because you have your lows, your higher low, and this would be your next high low. But if price does come back into this range over here, then the same way you had the deviation on the bottom, you would then end up having a deviation on the top whereby price would come back into that range. And then you start to risk coming to the mid-range level, which is going to be around that $19,000 to $20,000 zone. And if you lose that, potentially low. So get your levels marked off on your chart. Make sure that you understand within the greater scheme of things where we are. We're going through a transitionary phase within the market, and the markup phase is a real possibility, especially when you consider the candle close that we just had on the weekly chart. I also want to tie that markup phase in as well as the M2 money supply in relation to what you're seeing over here on the different oscillators. So if you look at here we go. If you look at the stochastic RSI, it looks exactly the same as the M2 money supply chart over here, which could lead to a markup phase, right? You had where your bottoms formed over there, your bottoms formed over here in 2019, and then the same thing, this was December, January, and you can see it's well on its way with momentum towards the upside. Now, what about the RSI over here? It's reclaimed the yellow moving average. That's a great thing. Once you start to see this moving average start to turn over, this provides the final phases of where you can get into the market, and that accumulation phase will be well on its way into the markup, and then you ultimately get to those distributive patterns. So you can see you are not too late. For those of you who may be worrying that you are too late within the market is still showing there's a lot of strength and potential to the upside. Once we have the monthly close, which is coming up very, very soon, just a couple of days time, we'll be moving into June. We'll see what the next histogram prints over here for Bitcoin. Every monthly close provides a lot of information. If the histogram starts to tick back above the zero line, you'll expect that these moving averages will cross over. And again, that's showing that there still is a lot of potential strength and momentum, which could be going towards the upside. Looking at the moving averages, we've been heavily focused on the 7, the 20, and the 50 EMA. So over here, we've been watching, this has been the 20 MA, excuse me, the yellow one is the 20 MA. It was providing a lot of resistance over there on the monthly chart. Bitcoin price came down. And could it be that this is a front runnable event whereby we were looking for a push into the 50, which is the pink, and possibly into the 7 MA, all the way as low as $23,000. It is possible that that monthly candle is going to close pretty much like this with a big wick behind, and then you could be looking for expansion later on. Remember, this is a slow moving chart. The point being is what you need to understand is you're looking into these regions over here. Let's just quickly change the color on that. You're looking into that region over there as a potential buy the dip zone. For Bitcoin, at least. You're looking at that as your buy the dip zone. So let's move on the weekly chart over here. So far, it's not looking too bad. You got your lows. You got a beautiful wick over there with a great buy the dip scenario, which was your next high low, the second high low. And could it be that this is the third high low? The only way that we'll find out is how the next week's or this week's candle goes. If this week you see an expansive candle to the upside and it closes anywhere around that $30,000 mark or higher, then you can say with high probability that this is going to be your third high low, and that resistance was, or this, at least this support was tested over here amongst the MAs and EMAs. That being, we have the 200. You can see a beautiful bounce of the 200 weekly moving average. Then you have the yellow 21 EMA, which in bull markets, if I turn off the other charts, which I can do so, let's quickly turn those off. Just have a look at that and then turn off the long term. There we go. So if you just have a look over here at just the yellow 21 EMA, you'll notice that excuse me, I'm now messing everything up over here. You'll notice that price action always seems to gravitate towards this moving average. And typically speaking, as long as price is holding above it and it's angled towards the upside, it's typically good, and it means that the bull run has a possibility of continuing. In the same way that anytime that you lose it, specifically where that 21 EMA, the yellow one, is angled down, it acts as resistance, and consequently price continues to the downside. So have a look at the prior bull run. Once this EMA, the 21 EMA, was recaptured over here. So look, it was recaptured here, but which way was it angled? Still down. Here it recaptured it, starts to angle upwards, retest, 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 and pretty much it holds it all the way through until such time as it loses it. It would have got you out of the market. Big loss over there, down to 28K, bounces, recovers, holds it again, and then when you lose it the second time, 48K is where you could have got out the market. So keep an eye out on that moving average. It's a good one. The Gaussian channel, we haven't brought that up for quite some time. So still turned red. It's going to take a while before this one turns green, but at the moment I've got two levels marked out, the breakout level and the breakdown level. We still capped within those zones, which is why I haven't brought this level up for quite some time. The last time I showed it to you, I said that we capped within the breakout and breakdown level, which ultimately means that price is just consolidating within that zone. Again, if you see expansion from this candle and it breaks up above the breakout level, so anything that closes above $30,000 is going to be incredibly bullish, and then you can start to say bull run back on. But you have to be careful, because if it does come back down and you start to lose that 25K level, remember, that means you're breaking back down into the broader range. Now, what about Ethereum? Same thing, kind of stuck within its levels, consolidating between the breakout and the breakdown level. And you want to see this happen, by the way. You want to see both Bitcoin and Ethereum consolidate within these zones to give the Gaussian channel a chance to start to slowly turn back up. So breakout level sitting at 2120 on the Ethereum chart, and the breakdown level at 1792, so 1792. Those are the zones that I'll be watching on the high time frame. Okay, 4-hour chart so far looking good. You know, we've been looking at the short, the medium, and the long-term moving average, and I said if any candles come underneath the prior 4-day close over here, which happened on the 9th of May at 25,810, anything underneath there, especially on a closing basis, if you even saw a 12-hour candle close under there, you need to bail out of all your long positions. Otherwise, treat it as a buy the dip scenario. And you can see, look at that beautiful expansive candle, recaptured all the moving averages. As long as you can see this one do the same thing, you can imagine this could very easily lead into a breakout. So we'll show you in a moment how this ties up, or ties in at least, with the lower time frames, because it's very important that you focus on how things work with the low time frames. If the low time frames permit price to push into the 30K region over here, this could quite easily lead to a bigger breakout, whereby, right, you have your lows, higher high, higher low, higher high, higher low, and that means you're looking for your next higher high anywhere above this region, which could be as high as that $33,000 to about $36,000 zone. So that's your high time frame. Expect that to play out over the course of the entirety of June. It's not going to happen overnight. That will take place over June. Next, Bitcoin, because of the big, powerful move up. Remember, the CME is the futures trading chart for Bitcoin. It's closed over the course of the weekend, and consequently, price had a massive gap up. So the pink zone over here is a gap. Now, the gaps have a high probability of being filled. So if you have a look at this whole area over here, there's a good chance that price action comes back into the zone. So for those of you who are having extreme FOMO and feel that you've missed out on the entire move, these are the levels you want to mark off. 26,890 is the bottom of the CME gap, and $27,935 is the top side of the gap. I would expect that price action will probably revert all the way back down into the low $27,000 region. So around that 27,300-ish level is probably going to be a good area to add to your positions, or get into the market if you've completely missed the move. That's giving the bulls the benefit of the doubt. No guarantee that they hold price up. It could easily end up being a trap and distributing straight through that level. But obviously, in trading, there's risk to reward, right? You have to sometimes take a bit of a risk to get a reward. And I think that would be a solid level to bid based on what you're seeing off the weekly close. The weekly close for Bitcoin, Ethereum is showing you that it's looking for expansion of that candle upwards. You expect continuation from that zone, and therefore you should back the bulls off of that level. Okay, what about the Bitcoin dominance over here? So Bitcoin dominance coming back into the range high once again. The first touch over here, we expected a rejection because we hadn't tested this area for quite a long time. But now you can see, if I zoom in, Bitcoin dominance is pushing up against this region once again. And the longer you see price, or the dominance at least, grind into this level, the more the probability increases that you're going to see a breakout from the zone, which means Bitcoin dominance could be going a lot higher. And that means your altcoin pairings are obviously going to suffer against Bitcoin. So just keep that in the back of your mind's eye. When you are trading altcoins, make sure to mark the chart off against Bitcoin before you take that trade. Let's say, hypothetically, you want to go long on Solana. At least see that Solana looks strong or matches some sort of important key support level against the Bitcoin chart before you take that trade, because you might be better off just taking a Bitcoin long. So let's go on to the total market caps and see what happened based on those candles. So we didn't get a proper retest of this trend line over here, but nevertheless, it is still low, higher low, and your next higher low. Remember, we're also still within a range, so we broke back into the range. Let's see what happens over here. This is where you need to be careful in case of a trap scenario, right? What would a trap scenario look like? Well, you can see we deviated back into the range. So could it be that you have a scenario like this where it comes back down again? Of course, that's a real possibility. Just keep that in your mind's eye when you are trading. What about total 2? Total 2 is a much cleaner chart over here. It looked like it was breaking down that mid-range level as well as the diagonal, and saved by the bulls in the final hour. You have a big move up over here. And so far, as long as this candle closes on the 3-day chart around this region, I would expect that is probably going to hold as your next higher low. And slowly but surely, it can grind back up and we can target towards the range high on total 2. That would mean good things for Ethereum and ETH. Okay, Ethereum and ETH, Ethereum and altcoins, I mean. Okay, I put a question mark on this one because this chart has been super sloppy. This is total 3 on the 3-day chart. You can see range bound, right? You can see also spot the parallel channel, which has been holding price towards the downside over there. Very easy channel to spot. And then this was the old range that we were watching, but you can see it's been sloppy. Price has been all over the place. So I put a big question mark. Is this going to hold as the next high low? If so, it doesn't matter. You know, there's a lot of resistance over here that needs to be cleared. And I'll just wait for a cleaner reclaim of these levels before I got too bullish on something like the lower cap or the medium cap size altcoins. Remember, the real altcoin party only begins when the altcoin market cap starts to hold above that $480 billion mark. Once you start to hold above that level, then you have a massive Wyckoff accumulation phase in play over here, and it's too soon to say if this is the true accumulation or you're going to get distribution again. So you can only confirm that accumulation phase is completing when price starts to close within that region. Okay, let's have a look over here at the S&P 500, since it also had a massive gap up. Again, this is the futures chart over here, and I think it creates an easy trade opportunity. So remember, we're in this broadening wedge pattern or expanding megaphone pattern, whichever pattern you want to call it. The point is you have pivot points on the top end and pivot points on the bottom end. So long trend line over here, pivot points, we've come directly into that level. This is purely just an easy invalidation trade, which is why it could be worth taking. Now, what would this look like? I'm going to mark it off and we can monitor it on the chart. Now, it would look something like this. Let's just quickly grab the short position tool. I would be looking to enter into a potential short over here with the stop loss just above. But I want to give it a loose stop loss because I want to see a closing candle above that candle. I'd be looking to target this at least first target down to where these previous lows were, coming in at 41.28. And then potentially compound that all the way back down to the bottom end. So it would look something like this. Okay, now let me explain a little bit further what I mean with regards to the entering of this position or the invalidation. So I would be looking for something like this, right? Let's quickly grab this tool. if I see a candle push up like that, and even if it goes this high, it doesn't matter. I want to leave a loose stop there. I'd rather hold this position, even if the candle expands all the way to the top, because if it's left as a wick behind, it doesn't matter to me. I'm only going to invalidate if there's any candles that close above this candle on the left-hand side's wick high. So if the candle closes like that, then let's quickly fix that. If the candle closes like that, I'll be willing to stop out the position with a minor loss. So I'm looking to build a potential short within this region. If you do want to follow along this trade with me in the same way that you did with the Bitcoin trade, then make sure to check out Prime XBT. There is a link in the description below. You get access to up to $7,000 in sign-up bonuses. What I'm actually going to do after the show, I'm going to give away a whole bunch of $50 credits as well. Please make sure you go through to my Twitter account. Again, here is my Twitter. Go through to my Twitter, Kyledoops, the verified one over here, and then look out for those codes that I'm going to be dropping later on. So if you do want to trade that, again, sign up over there. You need to use the deposit code. You have to put it into the promo section. Type in @Kyledoops once you've signed up, and then click activate the code, and you should get access to that. That's where you can trade the S&P 500, the DXY, other stocks, bonds, commodities, things like that. They have crypto as well, of course. Okay, next, what about the dollar? So the dollar, in order for these bullish scenarios to play out for Bitcoin, you really want to see the dollar reject from this region. So what would that mean? That would mean that you would end up having a scenario, right, where obviously you had your breakdown zone. We identified this already, and you have a lower high, and you'd be looking for your next lower high over here. I said that the more obvious pattern to spot is still the W formation pattern, which that means if this played out, obviously Bitcoin bulls are going to be trapped and you can expect price to go down. And I'll show you now on the daily time frame as well as the 4-hour where the resistance zones are on Bitcoin. We are currently coming directly into resistance. So now is not the time to be FOMOing into the market. All right, so if price does reject from here, how do you confirm that the lower high scenario is playing out? Well, the only way that you're going to know is if the dollar starts to break below that T1 target. So if you see something like that and it's holding under 103.34, then you can expect probably there's going to be continuation. Otherwise, anything above this T1, I'll just be looking as a retest and continuation higher. What does that mean? Because I don't want to confuse you guys. Pretty much I'm still giving advantage to the bulls and expecting for the dollar to most likely continue on higher until such time as this trend breaks. Next, Bitcoin. So let's look at Bitcoin now and Ethereum on the daily time frame. You can see the push. Remember, we have the bull flag formation. It's not the prettiest bull flag in the world. It's an in spirit of bull flag. Big move up over here. That's your pole. And then you're consolidating and slowly pulling back. And you're looking for this to eventually break out to the upside. So could it be that bulls front ran this entire scenario and you didn't get a perfect retest into the 200-day EMA? Of course, that's a real possibility. So what do you do next? Well, you kind of need to monitor according to what I've given you on the CME chart to look to potentially time your entry in case that is what's happening over here. So if that is what's happening over here, you'll expect that the next candle, which is today's candle, should lead to expansion and a big push through, and that will be the start of the breakout of this bull flag. What are the pivot levels? Well, currently, as long as bulls are holding price above $26,969, you would expect that they have control, right? They're going to hold price above. They've recaptured the 12 and 24 EMA as well, and you'll be looking for the yellow to slowly cross above the pink, and that's where we have those strong trending environments. So we're not there yet. Pullbacks over here technically are for buying. What about Ethereum? Exactly the same picture over here for Ethereum. Ethereum already closed with more strength. It closed outside of its downsloping trend line, which signals the start of the breakout for the bull flag, and its pivot levels coming in at $1,846, meaning as long as price holds above that level, then you can expect the RSI is going to trend on up and bulls have control in this scenario. So I hope I make that crystal clear. Before we continue, please take a second out of your day. I see I only have 289 likes on the video. It really helps to get the content out there. Please take 1 second to quickly smash the like button. Also, let me know in the comments, did you take the trade that I gave? Did you take the long trade that I gave last week? And also, if you didn't take it, what is your current position in the market? Are you looking to long or short? Are you looking to get into the market? I'd love to see in the comments what your thoughts are with regards to this price action that we've just seen. Okay, let's have a look at Bitcoin over here using our ranges. So very, very clean. I'm going to quickly show you. Now, for months now, you'll remember we've been focused on this area as a new range developing, right? So this is meant to be the new range. Price between $25,000 and $32,000 is the new range. This was the old range that we had. Okay, so that's clear, right? That was the old range. That is the new range. So what now? Well, if you look over here, price obviously started to come down. Now we've pushed directly into the mid-range. You can see the pink box area, mid-range. We've come directly into that mid-range. And you also have a diagonal trend line on the daily time frame, which is holding price to the downside. So it creates an interesting environment. It really could go either way, to the bulls or the bears over here. It's a tough decision-making process over here that you have to go through, whether you're going to get into the market or not. Once price recaptured the key monthly, it gave a very slight edge to the bulls. The key monthly is at 26,965. And this is where you have to be careful. You have to be so careful in case price comes back below that key monthly. Then it's a possibility that you could move all the way down to this level once again, which matches up with the 200-day moving average coming in around that $23,000. That would be the absolute ideal from a picture perfect standpoint. Textbook trade, that would be the absolute perfect place for Bitcoin to form its next high low. But remember, this market doesn't work according to a textbook, right? It can do absolutely anything that it wants. And I know I've given you a lot of scenarios over here. So for those of you out there, I'm sure a lot of people think, well, great, you're a genius. You said price can go up or it can go down. That's not how how trading works, guys, right? Remember, I'm trying to give you if this, then that scenarios. And that's how you should always think about it. You should have kind of like a flow diagram, and you say, well, if price goes into this level and it starts to reject, then what am I going to do? I'm going to do that. If price comes into this support level and it starts to bounce, then I'm going to do what? I'm going to do that. If it breaks this resistance level and it holds above, what am I going to do? I'm going to do that. And you have a plan for each scenario. That's exactly what trading is, right? We take trades because we want to decrease our probabilities of loss. You can control your loss then, right? As opposed to investing where you just put all your money in and you just sit on your hands and you hope for the best. Then you experience these massive drawdowns of 70, 80, 90%. If you can even call that a drawdown, I mean, that's a mega crash. And then you have to sit there and pray, hoping that price is going to return back to where break even is. When you're a trader, you don't need to do that, right? You just control your risk. You say, I'm willing to risk 1 to 5% or whatever it is on a particular trade. And you know exactly where you're wrong and you cut the position. And if you want to look for breakouts, you know exactly, right? Price gets above the mid-range, holds over here. Then as a trader, I know I'm going to enter into the position, stop goes below, shouldn't come back down there. Therefore, pushing back up, targeting towards this level. I hope that makes sense. Please let me know if that makes sense. Also, again, smash the like button. I see we're at 447 and there's 1,003 of you watching live. So please help me out over there. It does get the show content out. Okay, Ethereum. Looking at Ethereum's range levels over here. So similar to Bitcoin, Ethereum is held much better in relation to the range in the sense that it's been all the way above its mid-range for quite some time over here. So this is the range that you're looking at between that $1,700 and up to that $2,000 level. Ethereum's been within that zone. But same thing, it's coming directly into resistance, right? So it hits straight into that trend line. And now we need to see, and I mean, it's arguable. You can adjust this trend line ever so slightly. You can say that maybe it's already breached it, but we still yet to see any closes above that level. So let's keep a close eye on this. Ethereum's been moving a bit quicker. What about Solana? Solana, I told you, you'd be looking for a reaction off the 200-day moving average as well as the mid-range. This is what we were looking at last week. Now you've got that reaction, right? So now you have something more decent to work with, because you can say, as opposed to just grinding down, using the 200 as support, right? But you can see the 200 is angled down. You don't want to keep buying support whilst the thing goes down, right? You need to wait for a reaction and for the slope to change. Now that slope has started to change. I just saw, you have to also be careful with the narratives out there, guys. I saw a message this morning that 𝗕𝗏𝗏 is showing massive buying pressure on Solana. And although from a technical, it does support that, don't buy into these narratives too quickly, because they're saying that the Chinese and the guys in Hong Kong are already max bidding on Solana, because this is one of the tokens that are going to be listed on the Hong Kong indices, where they're able to buy it, remember, as a basket of different cryptocurrencies. So what you want to do, wait for the slope to pick on up, which it is already. Now you need to see price hold above the mid-range. If Solana comes back down into this region over here, and I showed you last week how to do all of this, go back to that video. I think it was on Thursday or Friday. Go back to that section. I showed you exactly what to do. If it comes to these levels, zoom in, and now you're looking for your next higher low, and you're working with this region, those wicks over there, as your invalidation. As long as price doesn't come back on a closing basis below 1869, it opens up the opportunity to go long. So you might see a back test into those into the 200 MA once again. Some of the other Hong Kong narrative coins which are going to be listed and look relatively decent that we covered last week is Litecoin as well. So here you have it, Litecoin. It bounced perfectly. Those were the two scenarios that we gave. I said, either you're going to deviate below the 200 MA, come into the longer term trend line over here and bounce from that level, or you're just going to bounce straight off the 200. So let's delete this scenario. You can see we had the bounce off the 200. Now you're looking for price to push and reclaim above $100, which is the mid-range. Once you recover that and you hold above that, then it's possible that you get a 50% move all the way up to about $145, $150. Cardano. Okay, Cardano also slowly starting to turn back its 200 MA towards the upside, bounced into that level, came back, almost touched it once again. So there you have something to work with. What about BNB? BNB, same thing. I told you I probably wouldn't want to touch this one. I just think there's better charts out there, but nevertheless, it is holding the 200 MA. Filecoin. Filecoin still has a bit of work to do. So you can see the broader range over here, right? The bigger range. Is this going to be another scenario where you had a deviation? Is this your next deviation? Well, if you reclaim above that level and you get above the 200 MA, then it opens up the opportunity, right? Now you have an invalidation and something to work with. Use the 200 MA as support, and you've deviated back into the broader range, that being the range low of that broader range. Atom. Okay, Atom still got some work to do as well. Could it be that this is just a massive bear trap over here, and Atom comes back into this range, recaptures the 200? Of course, that's a possibility. You don't need to act on it until such time as it does that. Why do we do this? We're eliminating risk, right? We want to reduce the risk. Okay, let's look at Matic. Probably not the prettiest one over here. I would move on from that. Chainlink, also not the prettiest one. Move on. AVAX. AVAX is not too bad, right? AVAX is coming back into the range, so it's holding the range low. We gave all these charts last week, right? Little deviation, reaction over there, big deviation, reaction over here, expecting a reaction in this zone. You got the reaction, and therefore you're targeting towards mid-range, and then after that towards the range high. Okay, what else? Another one I wanted to mention is this TOMO. I think TOMO is one of these AI coins. Now have a look at that candle. Absolutely massive. Measure it from bottom to top. That took a 132% pump in just one single day. So massive, massive move over there. And this is why you want to be very careful when you are shorting coins that don't have huge market caps, new coins, low caps, illiquid coins, because this was basically a short squeeze. And you can see it over here. It was pointed out by 𝗂𝗏, so 52 𝗂𝗏. Classic short squeeze, started from the spot market buying. They bought 14 million TOMO, and that just creates 100% rally just like that. So absolutely smashed over here. And guys, this is why you want to be careful at this point in the cycle. Remember, we've been in a bear market for the good part of almost 2 years right now. You want to be very careful with creating massive, massive short positions. Little quick shorts, right? Day trades, perfect, no problem. Scalps, no problem. But to be holding swing shorts and trying to short things like this that are going into an uptrend, it's not a good idea. You're going to get absolutely smashed over there. All right, Bitcoin on the lower time frame, 4-hour chart. So one good thing so far, we've reclaimed the 50 and the 200 EMA on the 4-hour. They are still angled towards the downside over here, but it will give it a chance to start to turn back up. But then you're contending, remember on the daily I showed you as well, you got your diagonal. So you got your long-term diagonal. But if we start to break above this level and these EMAs cross back up, any pullbacks, and there will be pullbacks, remember, when these EMAs cross, price almost always tends to gravitate towards back into that cross. Where does that level line up if I project the zone happening around here? Again, 27,400. So I told you 27.3, 27.4, those are your potential levels where you could be looking to buy to the dip, but we need to see more yet. It's too soon to determine whether this is going to be a good idea. You have the stochastic RSI, which is also starting to come back down, and then you can see by the volatility, it's been quite a big move. Let's quickly pick that up. So quite a big move. It hasn't quite reached the 100 percentile mark yet. It's been a long time since we've seen these red prints, right? So you can look at, this is the BBWP. So when you see big red prints like this, you know that the move, and this is based off of the Bollinger Bands, then you know that the expansive move is coming near its end, meaning that bulls have run their course and you can look to start to potentially fade. So still too soon, I think, to start to jump into short trades, in my opinion. Although the invalidation is clear and it's easy to spot, I am not really looking to jump in front of the bulls at the moment. I'd be looking to continue to hold any longs that I have and just add on the dips until I see it really get overheated. So liquidation levels, what about that? Well, if you look at the heat maps chart, we've taken most of that liquidity, right? So the liquidity was here at 27.8. This was why I took the long trade. This is exactly what my long trade was based off. Now I need to see a little bit more unfold. And this heat map chart will slowly change as new players start to add to longs and shorts. The market kind of reshuffles and digests the move. Anytime a big move happens, it digests what's taken place. And then we'll start to look for new trade ideas. Once those new trades take place, then you'll see new liquidation levels. Currently, all that we have to work with is 25,800. According to this chart, there's still a lot of liquidity within this level, which means you should not rule out at least a wick that comes down into that zone at a later stage. Okay, let's have a look over here. You can see bright blue. We outlined this as well. Last week we said expect liquidity to get taken over here. These are the 25 and 50x shorters, and they're probably going to get squeezed out. That was marked with negative funding. Now you have the exact inverse of that, right? You have long traders, which are starting to build big positions down here, 50x, 25x, 100x, and then you have the funding, which is flipped completely positive, meaning that every brother and his uncle are starting to go long on leverage into resistance, just to add onto that as well. So make sure you follow me on Twitter. I gave you all the updates. I said live Bitcoin trade given on Thursday, still in play. Friday show, we moved the stops to break even, eliminating the risk. Now it's a free trade. Update, I gave you an update as well today. That was on the weekend. Bitcoin has broken back into the range above the prior range low, confirming that the deviation has taken place. Keep holding because we're targeting the liquidity above based on the 25 and 50x short trader stops. And then I went on Sunday. I said updates on the long trade we took for Bitcoin, trim some of that position off and re-add or compound it in a couple of hours time. I was looking for a deeper pullback, so I wasn't able to re-add into that position. It didn't come back down to the zone, and boom, you just had the next massive move up. Final Bitcoin update. We're done. See you Monday. Congratulations, you made it. We're here on Monday, and this is what we're looking at. I'm telling you at the moment to kind of just sit on your hands, because on the hourly chart, we've come directly into mid-range. So using the exact same tool, I'm going to cancel that trade because we're done with it. It's finished. Here's the range, right? Mark off these levels on your chart. You got the range high, 29,989. You got the range low, 26,553. And then you got your mid-range over here, 28,282. So let's zoom in. You can see it looks very, very toppy when you look at that, right? So if it is toppy and it's going to be coming down into this region, remember what I told you around this 27.3 to 27.4, I expect some demand to kick into this zone. And then I'll be looking for this. I think there's a lot of orders that have been stacked over here. This is a potential buy the dip zone. What do you expect next? Okay, let's say buyers step in once again. Then they're probably going to break through this level. So the mid-range, they're probably going to break the mid-range level once again, send price all the way to the top side liquidity over here at about 30K, take that out, and then we'll reevaluate. That's one scenario. The other scenario is if buyers do not step in over here, or maybe they do step in, but sellers overpower them and it goes straight through this level. Well, then it's possible that you go all the way back down to those original targets that we had as one of the scenarios, which is around that 200-day moving average coming in at 23.5, 23.6 and rising each day. So that's what we're looking at. Look, I think we'll have a lot more answers come midweek once the stock markets are open. Price action has a bit of time to digest. I know it's a bank holiday in the US, so pretty much most of the markets I think in the world are going to be closed. So we'll reevaluate come Monday. Make sure, guys, you also check out BitGet. If you are struggling with KYC, I think they are still non-KYC, so you can still trade there on BitGet. There's a whole lot of opportunities on this exchange. There is a link in the bio below. Sign up over there. You get up to $8,000 sign-up bonus if you use my link. You lose nothing, and it does help me a little bit. So that's it from me, folks. I will see you all on the next video. Again, stay patient out there. Sit on your hands. Don't do anything too drastic, because when the market's volatile like this, you're just going to end up getting wrecked. See you all tomorrow. Have a great day, and cheers for now.